A little over a year ago, I started covering a company called Hims and Hers. The stock was trading for $16.88 per share, and they had not gotten into GLP-1s at that point. Since then, the stock is up 262%, and the stock is going for over $61 per share. But I think the potential for Hims and Hers is much bigger. I think $500 per share is possible by 2030. These kind of stocks don't come along very often, but when you consider how big an industry Hims and Hers is trying to disrupt, the numbers get really big really quickly. The US pharmaceutical industry is about $660 billion per year. Weight loss alone is about $90 billion. In all, healthcare is a $4.9 trillion industry just in the US. We're talking about a multi-trillion dollar total addressable market for a company with a $13 billion market cap. This stock could 10x, it could 100x over the next 10 years. And I'm going to cover exactly why I love Hims and Hers stock right now. The biggest thing is that Hims and Hers is part platform and part aggregation company. You can think about aggregators as companies that pool demand together. Netflix does this for TVs and movies. Spotify does it for music. Uber does this in rides. The simple way to think about an aggregator is what application are you choosing to interact with on a regular basis. The platform part allows other businesses to be built on top of Hims and Hers. Providers that consumers can access 24/7. Personalization. New products can be launched here. Some developed in-house, some developed elsewhere. And a platform is a scalable solution. Everything at Hims and Hers is scalable to new products, to new geographies. That's really the key to the company's growth. So when you add this massive potential market with the fact that Hims and Hers is aggregating demand, giving them power over commodity suppliers, and this is a platform business, that is how you get such a massive potential. And the flywheel is really just getting started. The more users Hims and Hers attracts, the more solutions that Hims and Hers is able to offer users, the more users it's going to attract. The more each of those users is going to spend, which is going to lead to more investment in more solutions and products for those users. This is a flywheel that has already started to take hold, going from ED products to hair loss to mental health. Soon, we're going to see menopause, testosterone, and much more coming to the platform. If you're interested in investments with asymmetric return potential like Hims and Hers, check out Asymmetric Investing. That's my newsletter where you're going to get deep dives on companies like Hims and Hers. I covered this company in early May 2024. You can go back to covering Spotify in the spring of 2023, Coinbase in summer of 2023, or Robinhood last fall. These are all companies that have generated asymmetric return potential, and that's why the asymmetric portfolio has absolutely crushed the market. So if you're interested in beating the market and what I am buying every single month, that's exactly what I tell my readers on Asymmetric Investing. There's a link on the screen and a link in the show notes if you want to join that community. Love to have you there. And I do want to thank this video sponsor, Fiscal.ai. This is the research tool that I use for everything here on Asymmetric Investing. They have phenomenal charts. They have phenomenal data going back 10, 20 years for tens of thousands of companies all around the world. Just a phenomenal way to find investment ideas and do all the due diligence that you need to do. I use their artificial intelligence tools to go through transcripts, makes it much easier and faster to find the information I need in those transcripts, and their KPIs are phenomenal. That's their key performance indicators. I'm going to go through a few of those with Hims and Hers here. Can tell you how many subscribers they have, how much those subscribers are spending. It makes it so much easier to pull out the valuable information. So check out fiscal.ai/ASYM. You want to try that out for free. They'll give you the pro version. And then after 2 weeks, you will get 15% off. This is a tool that I pay for myself, so I am putting my money where my mouth is. But before we get to some of those key performance indicators for Hims and Hers, I want to go through the strategy of what Hims and Hers is building. And it's easy to look at this as a company that's just a couple of products that serve a niche solution, but there's so much more than that. I look at a lot of the products that they've already gotten into as really a Trojan horse way to get into the healthcare industry. They started with sexual health. Yes, that is a huge market, and it's an area where they have been able to innovate and reach lots of new customers. Move into dermatology, mental health, weight loss. This is what has gotten them so much attention over the past 12 months is their GLP-1s. They were using an exemption because of shortages for a lot of GLP-1 products that allowed them to compound those GLP-1s and grow over 100% in the second half of 2024. But this is just the start. This is just the solutions that they are providing to users right now. They're going to be adding more. Look at this coming soon area. Testosterone, menopause, longevity, sleep, preventative medicine. Preventative medicine is a massive market. So as the breadth of solutions that Hims and Hers provides customers, they're going to be able to attract more and more customers and provide more solutions to each one of those customers. Add to that the fact that they're investing in artificial intelligence. Now that's a huge buzzword, And I'm generally skeptical of companies who are investing in AI and using that to try to attract investors. But think about all the capabilities that artificial intelligence is going to bring to the medical community. And what are the companies that are going to be disrupting, and what are the companies that are going to be disrupted? Hims and Hers is the kind of company that is going to be able to connect with users, have those users provide information, whether it's from a Garmin watch, whether it's from an at-home test. They'll be able to provide images, answer questions, and then potentially get solutions from artificial intelligence. Maybe it's as simple as, here's a meal plan to lose a few pounds. Maybe it's, what is this rash that's on my arm? Or maybe it's a more serious solution where artificial intelligence can help provide solutions in the middle of the night when the doctor's office isn't open. These are the kind of valuable things that Hims and Hers is going to do as they expand the platform. You can see in a slide like this from their first quarter 2025 presentation that the framework is there, that what they're building for the future is clear, but it's not all built yet. And that's where we have to look at, how are we going to judge this company going forward? And there are three things that are going to drive Hims and Hers stock value higher: revenue growth, margin expansion, and multiple expansion. I'm going to go through all three of those. Revenue growth is pretty clear. You can see that since 2020, the company has grown revenue at 79.4%, just a phenomenal growth rate. But what's driving that revenue growth? It's the number of subscribers on the platform, now at 2.37 million, and the amount of money that each of those subscribers is spending, now up to $84 per month per subscriber. If you're able to grow both of those KPIs, key performance indicators, this is going to drive double-digit growth for Hims and Hers for the foreseeable future. It's not out of the question that Hims and Hers could compound their revenue growth at 40, 50% for the next decade. That's how big this market they're getting into is. So as they expand the number of users, they're able to expand the number of products. They recently made an international acquisition. All of these things are going to drive Hims and Hers growth, and that growth momentum should continue for a very long time to come. But the second factor to look at is margin expansion. And that's where you can see here with this information from fiscal.ai, gross margins are actually going down. That tells you that the markup that Hims and Hers is generating for each product that they sell is getting a little bit lower. They're more competitive on pricing. That's actually a good thing if you want to grow the business. But what's impressive is they've been able to lower those gross margins while increasing operating margins, 6.5% in the last 12 months. That's what's helped drive the rapid increase in net income for Hims and Hers. So this is now a phenomenal growth company that is increasing its margins at a rapid rate and turning a profit. And management has said that those operating margins could increase between 1% and 3% each year for the next few years. So this could be a company generating 10, 15, even 20% operating margins 5 to 10 years from now. And that's where we get to the potential for multiple expansion. One of the underappreciated metrics that drives phenomenal stock performance return for investors is just simply expanding the multiple that investors are willing to pay for a stock. Some stocks don't grow their revenue at all or their profitability, but their stock doubles in value just because the multiple, the price to sales multiple or the price to earnings multiple, goes up by 2x. Look at Hims and Hers' price to sales multiple, 7.4 times right now. Now, this is a company that is growing revenue currently at over 100% year over year, and it's trading for 7.4 times sales. Let's look at a couple of other companies that are considered high growth. Palantir, growing revenue 33% year over year. Their price to sales multiple is 105. Robinhood, a stock I own, a company I really like, growing revenue at about 60%, but their price to sales multiple is about 20 times. The point here is there's a lot of opportunity for multiple expansion for Hims and Hers. If the company continues to grow at a high growth rate, I don't think 100% growth rate is going to be sustainable over the next few years, but if that growth rate is 40, 50%, it deserves a higher price to sales multiple than 7. And it probably deserves a higher price to earnings multiple if those operating margins of profitability continues to improve. So we could see a 2x, 3x, 4x, or even more increase in just multiples for Hims and Hers. And that could help drive the stock from about $60 per share today to towards that $500 per share number by 2030. So I think this is one of the biggest opportunities on the market today. Hims and Hers is one of the few disruptive companies in healthcare. They're not just simply doing insurance a little bit differently than somebody else. They're not just a SaaS company. They're trying to fundamentally change how we pay for healthcare and how we interact with healthcare on a 24/7 basis. They don't take insurance. They don't have off hours. And the products that Hims and Hers is offering to customers today are going to expand rapidly. So if you're a parent like I am, you can imagine a future where a child that gets sick late on a Friday night could have their medicine by morning from Hims and Hers. You could see a world where the EpiPens that I buy a couple times a year are not $500, they're $50. And they come once a year or once every 6 months. Because that's a prescribed solution. And I'm happy to pay cash for that to not deal with the headache of going to the doctor and the pharmacy. And you can probably think of dozens of products that fall into those categories. Whether you're young, whether you're old, whether you have kids, or whether you're living alone, everyone can think of ways that healthcare can be done better. And Hims and Hers is one of the companies trying to do that with their disruptive aggregation platform. So look, I think this is one of the biggest opportunities in the market. If you want more from me about Hims and Hers, check out Asymmetric Investing. Like I said, there's a link on the screen and a link in the show notes. This is one of the stocks that I cover most on that newsletter. And I tell my readers every time I'm buying this stock, it is now one of the biggest positions in the portfolio, but because it has grown into that position. And like I said, that portfolio is beating the market by a wide margin. So love to have you as part of that and share those disruptive ideas with you every single week. But let me know what you think about Hims and Hers and the potential of this being a $500 stock just 5 years from now. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing here on YouTube. Thanks for watching, everybody. See you here next time.